What's going on, everyone? Hootmoney here with another video for you guys. Indoor sunglasses engaged. Today we're going to be talking about BBIG, Vinco Ventures. And well, now I kind of have to say it. I don't want to say it. Vinco Shrinko. But we're going to be doing a history lesson today. We're going to be talking about this stock and historical implied volatility and what exactly this means for BBIG. Like I've talked about previously on this channel, is that there are strong correlations between implied volatility, historical call option volume, and price action on BBIG. So today we're going to compile that and show you guys what exactly we can expect from the current climate that we're seeing in historical implied volatility. I hope you guys enjoyed today's video. Drop a like on it if you guys did enjoy. Subscribe to the channel if y'all are new. Hit that post notification bell so you always get alerted when I do make my timely updates here on this channel. And if you want all of the timely updates, all my buy and sell alerts, we're doing really well. We're up 36% on an SST option we got earlier. You can check out Hootmoney trade alerts with the link below. We've been on absolute fire with that. But with that being said, let's just jump right into the video. All right, so I did actually explain a lot of my thoughts last night on Twitter when I did put together this due diligence. So make sure you guys follow me on Twitter at HootmoneyYT. It's very, very important. Obviously, you got this information yesterday at 8:28 p.m. And right now it's 5:47 p.m. So essentially what we have right here is the chart of the implied volatility index, which is essentially an index showing all of these implied volatility values for BBIG. So I think the way that they calculate this is they take each expiration, the closest to the money contract, so in this case the 2.5 and the 3, and then they just take the average value. So that's at 162%, 156%, and they even go back here because different expirations have different IVs. Right here's at 107%, 109%, and then April 14th, or actually April 8th, which is the closest, is at 172%. So the way that implied volatility works is it's nearly almost always higher at the closer expirations than the further expirations. What is implied volatility? It's essentially the excess premium you're paying on your options contract to price in the expected volatility that you're going to be seeing in a stock. So if you have implied volatility over 100%, that means that there is definitely expected volatility to come out of this stock price. This is why the max pain theory works in the first place, is because you can use implied volatility to price these options accordingly to make it less probable for the option buyer to actually win. So implied volatility, it's not an actual thing that gets shifted around, but it's based off of supply and demand. So if there's more demand for an options contract, let's just say all of the retail community wants BBIG to short squeeze, like y'all should. But what ends up happening is if everyone wants it to squeeze, everyone buys those contracts, then the implied volatility goes up. So just like how a stock price technically should go up if there's more demand, that's essentially what implied volatility is. It's a factor of demand. So getting back into the historical implied volatility index for BBIG, you're seeing it. That's that yellow line that I'm following right here with my mouse. It goes up, it goes down, it goes up, it goes down, it goes up, it goes down, etc. You'll see the most obvious spots where it goes up a ton, which was in August to September of 2021, and then obviously right here in January. Yep, January, the recent rally to $6 per share that BBIG had. Now, what's in common with these two? They were both gamma squeezes. So implied volatility tends to go up when there's a gamma squeeze because, again, a lot of demand for those contracts. So what exactly does this mean? Right here at the 150% level, I've drawn a line and we can see all of the times where implied volatility was under 150%. And what exactly happens after implied volatility goes down under 150%. It was under 150% back from April to around the middle of May of 2021. Also right here, here from the middle of July to towards the end of August, it was under 150%. Right here, middle of November towards the beginning of December. And then right here from the middle of February to the beginning of March. So all of these areas where implied volatility was under 150%, I did in fact shade on this chart. And as you guys can see, the purple shaded regions, which again are these areas in green where implied volatility was under 150%, it does in fact correlate with a decreasing stock price. A lot of the time, if there's a decreasing stock price, there's obviously less demand for call options. And if price action is gamma squeezing, obviously there's more demand for call options, so it goes above 150%. So let's try to find a correlation here. So what always tends to happen after these areas of purple? We see a spike up in share price. We saw it right here, right? A nice little spike up. We saw it right here on this little sliver. A nice little spike up happened. Right here, it took a little bit, right? The share price declined a little bit, but right afterwards, a huge spike up, all right? Same thing right here. It absolutely dips. It tanks. It wasn't the best signal here. This is arguably the worst signal that we have seen, right? But we did get some green Heikin-Ashi candles, and the share price did in fact increase to a high right there of $3.60. Then again, 150% IV or less, and we get this decreasing price action right here, only to get that gamma squeeze in January. Same thing right here, decreasing price action throughout February and the beginning of March for BBIG. And then right afterwards, boom, we move from $2 a share up to a high of $3.50, over a 50% gain. I'd like to quickly thank the sponsor of today's video, which is Moomoo, a licensed FINRA broker that does absolutely zero payment for order flow. They're running a promotion where you deposit $1 on their platform using the links below in the description or pinned comment section, and you can get up to $7,000 in free stock. There's 2 free stocks up to $3,500 each, so you can potentially get an Amazon stock, Apple stock, Google stock, Tesla stock, you name it, you can get it. Free lotto tickets on Hootmoney. Links are below in the description. And remember, to get this promotion, you got to deposit at least $1 on their platform. With all that being said, let's get right back into it. So moving back into the historical implied volatility for BBIG, obviously there's a correlation between this 150% implied volatility index level and the price action of BBIG. It tends to move up after it hits that 150% point. Well, right now we are sitting right at 150% implied volatility on the dime. There's definitely potential for it to dip under 150% implied volatility, and that would also technically mean that the share price would decline. If I'm just looking at this chart though, and I mean, this is all speculation, the historical IV that we're seeing in this region reminds me greatly of what was going on right here from basically the middle of December to January. It dips down below the green, comes right back up. It wasn't quite ready, so it comes back down, it consolidates, it chills at that 150% level, and then boom! Same thing right here. It dips down under into the green, it comes right back up, it realized it wasn't ready, comes right back down, and then boom! I'm not saying that it's going to happen for sure. All I'm saying is that it might. History doesn't repeat itself, but it often rhymes. Here we have the massive gamma ramp for BBIG for April 14th, which we still have over a week until the expiration here. 27,000 at the 3, 29,000 at the 3.5, 45,000 at the 4, 28,000 at the 4.5, 69,000 at the 5, 11,000 at the 5.5. So all of this begs one question. Are you gonna be on the right side of history? Anyways, that's the update for today. BBIG stock, let's freaking get it. Hope you guys enjoyed the video. Drop a like on it if you guys did. Subscribe to the channel if y'all are new. We still got time, baby. We're oversold right now, and let's run it, baby. I'm ready to go. I haven't sold a single share, haven't sold a single call option, and I don't plan on it, baby. We're going for this gamma spike. We're going for this IV spike. Let's run it. Anyways, my friends, that's about it for the video. Hope y'all enjoyed. Drop a like on it if you guys did. Subscribe to the channel if y'all are new. Check out Moomoo if you want up to $7,000 in free stock as long as you deposit $1 on the platform. That's the second link in the description, first link in the pinned comment section. And if you want Hootmoney trade alerts, where we've been absolutely bagging up, the play today was up 36% on SST calls. We're leaving those ones as a runner. You can check out Hootmoney trade alerts with that first link in the description. Anyways, that's about it. I'll be seeing you guys next time. Have a wonderful day.